Okay. So for those that don't know me, my name is Mel Mills, and I work for Big Society Capital. I'm going to be your host and facilitator for this webinar session for Good Finance, which is what's changed in social investment. We have had a series of webinars starting way back at the beginning of the year when the pandemic first hit, and we've been covering a wide range of subjects that social enterprises and charities have wanted to know more about. I think it's fair to say that what's changed in social investment is a follow-on webinar where we were particularly covering types of emergency finance, and a lot of organisations have been asking us to do an update on that based on the fact that there has been a series of responses and new products, both repairable finance and grant finance. And I was saying that perhaps, you know, if we were to reflect, perhaps Good Finance wouldn't have looked to provide information about grant finance previously, because it wasn't where we were planning to start and specialise. But as this situation has unfolded, it's been really important to make sure that we can give a full list and overview, I suppose, of all of the different types of support that are available. So we'll just give a couple more minutes because we're actually early, we're dead on time. So we can get anybody else to introduce themselves in the chat. It really helps the panelists to know who's joining us, your name and the organisation that you're from. It would be great. Lovely, thank you, Andrea. Hi, Barnaby. Yeah, it's great. If you can change your default in the chat to all panelists and attendees, that's great. And then everybody can see who is joining. The panelists, I'm going to give you an introduction to everybody, but you should hopefully on your screen be able to see our names and the organisations that we're from. As I said, my name is Mel Mills and I'm from Big Society Capital. I'm going to be the host. Hi, Helen. Oh, and Jim Brooks. It's another name that I know. That's great. Hi, Laura. And Abby from Kindling Farm Community Benefit Society. Okay. I'm going to give it just about 30 more seconds and then we're going to kick off and start. Also, just to remind you that we will be taking your questions. So you should be able to find, for most people are, I think, getting increasingly familiar with Zoom or with Teams, but if you hover along the bottom of your screen, you'll be able to find a Q&A. If when any of the panelists is speaking, you have a question either for them at that moment or for one of the rest of the panelists, please pop it in the Q&A and I'll look out for them and then make sure that we try and get enough time to cover that for you, which will try and take as many questions as we can. So I'm going to just kick off and start. Say anybody else that joins us, please do feel free to introduce yourself in chat so that the panelists can see who you are. My name is Mel Mills, I'm from Big Society Capital, and I lead on our work. I always call myself a translator, so to try and translate things that happen in social investment to be relevant to social enterprises and charities. And along with the sheet of investors, I'm responsible for Good Finance, which is one of the main ways that we try to do that. Good Finance is jointly funded by both the Access Foundation for Social Investment and also by Big Society Capital. So I'm sure there'll be more questions that come along that will ask me to tell you a little bit more about them. I'm going to introduce the panel. I'm going to introduce them in order of speaking, but I'm merely going to say who they are and then ask them to introduce themselves and tell you a little bit about their organisation. So first up this morning on the bill is going to be Seb Elsworth from the Access Foundation. Seb, just while on mute, just say a little bit more about Access.
Thanks, Mel. Morning, everybody. Yeah, so Access is Big Society Capital's sister organisation, and similar to Big Society Capital, we're a wholesaler. So in the jargon of this social investment world, what that means is that we don't directly support charities and social enterprises, but we support the fund managers and the partners who do Unltd being one such example you're going to hear more from this morning as well. Our job is to provide what we call subsidy or grant into different social investment providers, so that they can provide more of the kinds of products that charities and social enterprises say they need. And when I talk in a moment, Mel, I'll say a bit more about how we do that.
That's great, thank you, Seb. And then next on the bill is going to be Alun Jones. Alun, do you want to just unmute and introduce yourself?
Yeah, sure. So my job title is Head of Social Investment Cymru within Wales Council for Voluntary Action. So WCVA is the lead membership body for third sector in Wales, equivalent, I guess, to NCVO in England. And within what we do provide loan and blended grant and loan finance for third sector organisations, really for market failure, for those that can't access funding through the banks.
Lovely, thank you very much, Alan. And last but by no means least, Mathu, do you want to introduce yourself and Unltd?
Sure. So my name is Mathu Jeyaloganathan. I am the head of investments at Unltd. Unltd is the foundation for social entrepreneurs, and we provide grant financing and investment financing to social enterprises that operate within the United Kingdom. And I think I'll leave it at that and talk a bit more afterwards.
Okay, that's great. Thank you very much. So what we're going to aim to do is to give you an overview of both what's available in terms of social investment, but also what's changed, particularly over the period of the pandemic, how social investors, grant trusts, foundations have responded to try and best support social enterprises and charities. So we're going to start off with a little bit of context from Seb, because Access has had a leading role in actually being able to do this. And I think lots of the things that Seb's going to tell you about will then make more sense in terms of the organisations who are actually delivering those products, so that social enterprises and charities can actually access them. There's lots of accesses in there. Seb, I'll hand over to you.
Sorry, managed to click on the wrong thing. Apologies, everybody. You're on mute, becoming the refrain of the world as we all live through Zoom. So yes, thanks, Mel. Great to have the opportunity to say a little bit about what Access has been doing. So I will just give a very brief overview of the kind of breadth of our work, but concentrate particularly as we are here today to think about what's changed over the last few months. So Access's job basically is to provide grant and other forms of subsidy into the social investment market in England. And given that we're going to hear a Welsh perspective, I wanted to make that clear that unfortunately our programs are focused on England only. So we manage money from the National Lottery Community Fund, from Department for Digital, Culture, Media and Sport, and also unclaimed bank accounts. But we make that available to social investment intermediaries, fund managers, partners in a variety of different ways, so that they can better meet the needs of what charities and social enterprises say they need. And we do that in three key ways. So the first is targeted grants and support programs to help organizations who are looking to grow their trading income through enterprise models. The reason we do that is that ultimately that's really the precondition for investment being a useful tool. So we want to support more organizations to be able to develop those enterprise models. We take a sort of subsectoral thematic approach to how we do that. And at the moment we're working across 4 subsectors, and those are homelessness, the youth sector, equalities and mental health. And for each of those we have a sector partner who leads on that. So it's Homeless Link for homelessness, it's Centre for Youth Impact for the youth sector, it's Equally Ours for the equality sector, and the Association of Mental Health Providers for mental health sector. And that overall program is called the Enterprise Development Program, and a social investment business play a role in managing the grants and support elements there. So if you look on our website and click through, you can find out more about how to apply to the Enterprise Development Program if you're in one of those subsectoral areas, but really the focus there is on grants and support learning opportunities that aid the development of enterprise models. The second area is for organisations who are really quite actively considering taking on social investment and are already in conversation with a social investment fund, but where both the charity or social enterprise and the potential investor think that there's a piece of work that needs to be done prior to being able to take on investment. That might be in many cases it's a piece of financial modelling. So we need to have 5 years of cash flow forecasts, and actually at the moment our financial systems and processes aren't really good enough to produce that. So we'll do a bit of capacity building work on the finance function, or it might be a piece of market testing around the enterprise plan, or it might be a piece of governance work to perhaps slightly rejig a group structure to make it more suitable to take on investment. Whatever it might be, it is at the moment a barrier to being able to take on investment, and it's something that a piece of grant funding can help organisations overcome. And that's called the Reach Fund. Most social investment specialist fund managers in England are access points to the Reach Fund, so they can refer organisations into it if you're talking about taking on investment. And that really helps organisations kind of overcome that final hurdle to being able to take on a loan in many cases. And then the third way in which we apply grant and subsidy is in what we call blended finance programs. And that really means when organisations are taking on repayable finance in one form or another, and it's often a loan, we make grant available alongside the loan in various different ways. Sometimes that is grant for the underlying charity, so you would receive a blended product, part grant, part loan, or it might be grant that is blended in the social investment vehicle. And the reason for doing that is that it allows social investors to take greater risk on the organisations that they invest in, or be able to make the interest rate more affordable for the loans that they make. So the grant doesn't actually flow to the organisation itself, but without it in the structure, the investment wouldn't be possible. And we do that through the largest program through which we do that is called the Growth Fund, where we've invested through 15 different fund managers around England, some of whom cover the country as a whole, some of them who cover particular parts of England, and some of whom focus on particular subsectors. Obviously, Good Finance is the place to go to see the range of those different fund managers. So over the last few months, how has this been changing? Well, the capacity building programs I spoke about first have been continuing, and for many organisations, obviously when COVID first hit and we were in the sort of midst of the crisis, it wasn't necessarily the time to be thinking about sort of longer term business planning. It was more a case of sort of short-term adaptation. But actually now many more organisations are starting to think about what do the kind of longer term business model pivots need to look like, and how are we going to rebuild our trading income in the context of a radically different context going forward. And so the Enterprise Development Programme is sort of slightly adapting to that and making sure that the support it offers is suitable to organisations at that point. Similarly, the Reach Fund is perhaps hasn't been the best tool for organisations who've needed emergency lending, because by its nature, emergency lending needs to happen quickly. But as organisations are now thinking more strategically about the kind of financing they need going forward, again, the Reach Fund is able to provide more of that support. The Growth Fund has changed quite a lot over the last few months. So for organisations who have had a loan already through different Growth Fund partners, the key thing has been over this period to make sure that those lenders are able to offer the kind of flexibility that many organisations have needed. And for the majority of existing borrowers, that's meant capital holidays and interest holidays in many cases as well, just to make sure that the demands of loan repayments are not an excessive barrier during the period where many organisations have experienced a drop in income. But actually, social investors have been able to be more flexible than just given holidays, and many are looking at how some of those loans might be reforecast over a longer period of time to make sure that they are affordable on an ongoing basis. To facilitate that, we've changed the terms of the way our money is available to those fund managers. There's been additional grant provided so that those repayment holidays can be made where necessary, and there's been a holiday on the interest accrued at the wholesale level as well, to give that flexibility, the opportunity to be used by fund managers. Looking forward, we're now working with all of the growth funds on what the future lending will look like. The programme as a whole is about half deployed at the moment, so there's about £25 million more of loans to be made over the next few years. They're all sub £150,000. The average of loans made so far is about £60,000, so that's the kind of area, size area that we're looking at through that programme. And they are all unsecured, so there's no expectation that there would be either a building or other forms of security offered alongside those loans. We recognise that going forward, obviously many organisations are going to be wary about taking on further investment, and so we've been working with all of the growth fund investors to think about how their products might need to change, how they might need to evolve, and we're in the process of bringing all that together for our investment committee, which happens in about 10 days' time, to discuss how we kind of pass that continued flexibility onto the growth fund, so they can offer more of the kinds of products that the sector needs going forward. The key message at this point is that the growth fund is very much open for business, and if it is a relatively small loan on a sort of 3 to 5 year term that you think might meet your needs, then the growth fund is very much a place to look. And as I say, obviously Good Finance is the place to go to navigate through to the right fund manager for you for that. The other big development for Access over the last few months has been, as we've been talking to government about the impact of the pandemic and social distancing on the sector, we've been able to access, pardon the pun, a further £30 million of money from dormant bank accounts, which has been made available to us to use with social investment partners to expand the range of social investment products that are available, both in the short term, where we're still sort of dealing with crisis response, and in the longer term recovery as well. So this is evolved in those two different ways. The first has been using some of this 30 million to make grant available in a blended product for the underlying charity or social enterprise, where social investors are making emergency loans available to charities and social enterprises. So where there have been particular initiatives to support the sector's need for capital through social investment, but where 100% loan might not be what the organisation needs, for a number of those fund managers, we've been able to make grants available to sit alongside that loan. So the first of those that's live is the Resilience and Recovery Loan Fund, which I know Alan's going to talk more about, particularly in the Welsh context. As I say, unfortunately, the grant is unfortunately restricted to England by virtue of how it flows through from English dormant accounts. So for those accessing that in England, if you apply for RRLF and you are applying for a loan, not a grant, but if during the process of assessing that loan it appears that it isn't going to be viable without some grant in the mix, then colleagues at Social Investment Business or their delivery partners can then recommend that part of that deal is made available as a grant. So up to 40% of the loan amount in some circumstances could be made available as a grant, and so you're not having to repay the whole amount of capital that's received. As I say, it's not a grant program. You're applying for a loan if you go through the process of applying with the Resilience and Recovery Loan Fund, but that grant could be made available if it's needed. So that's all, again, I mean, accessible via Good Finance and also from Social Investment Business. There are 4 other funds that are operating in different parts of England who are going to be making that kind of grant product available alongside loans as well over the coming weeks, and we're just in the final processes of those being agreed. The second part of this programme, and it'll be the majority of that 30 million that's made available, is really looking to the future and looking to the kinds of social investment products that are going to be needed for charities and social enterprises over the coming years as we all focus on economic recovery and rebuilding our own organisations, as well as rebuilding the communities who've been impacted by COVID, particularly over the last few months. And really, we think there's an ongoing need for more flexible, more patient kinds of social investment. This has been a gap in the market for a number of years, but I think has been accentuated by COVID, because the nature of the recovery, obviously no one has a crystal ball, but we assume is going to be lengthy and difficult, and it will be a while before we're all able to trade at the kind of levels that we would want to be able to. So we're working now with a number of partners on designing how this should work. And again, we will make grant available to social investment fund managers who would then access a range of other sorts of capital. It might be from big society capital, it might be from banks, it might be from other foundations, to make more of this kind of flexible finance available. So we're still in that design phase. We hope that we will be clear about exactly how we will make that money available to the fund managers by the middle of September. And then we expect an application process resulting in the first of those funds being able to flow to charities and social enterprises by early in the new year. So we'll continue to update via Good Finance, obviously, Mel, as that evolves and the products start to flow to charities and social enterprises. If you have particular input you'd like to make on the design of that, then there's a call for ideas through the Connect Fund, which is our infrastructure program with Barrow Cadbury Trust. If you go to the Connect Fund website, then you can see how to feed in ideas into that consultation phase, and we can share that link now as well. I'll stop there. I think those are the key things.
Okay, lovely. Thank you, Seb. That's great. I mean, I think it gives people a really good understanding both of the sense of emergency response, what people could do quite quickly and come together to work together. And I think the thing you talked about when organisations who had already taken on repairable finance, the options to be able to go and talk to their social investors and to be able to not only perhaps have a repayment break, but the other kinds of support that are there are very important. But then leading us as well towards recovery responses. And we're starting to get some questions coming in, which are great. I have one specific one around the Growth Fund, which I'm just going to ask you, Seb, before I move on to Alun. And it's from Emma, and she's asking, does the Growth Fund cover charities that want to purchase tech infrastructure? So I'm not sure if there are very many restrictions on the things that Growth Fund can actually do or not in terms of business models and purchasing, but I just wondered if you could cover that one for us.
No reason why not. I mean, the issue would be less kind of exactly what the money's for and more about the business plan for repayment, but that's certainly the sort of thing that has been borrowed for.
Right, lovely, thank you very much. So Emma, that should be your answer. That basically, and I'll post a link in a minute. I have been trying to post some links in the chat as people have been talking, so where you can find more information either about the Recovery and Resilience Loan Fund, or where you can find more information about Access's programs. But I'm going to hand over swiftly to Alun, and he's going to take up the mantle to talk a little bit more about the RRLF in terms of them as a delivery partner, but then also perhaps give us a little bit of an insight into other programs. I'm sort of conscious, as much as Seb says that there isn't the same, not able to use the grant support in Wales, but I'm also conscious that the nations themselves have their own programs, and some of those leave certainly some of us in England wishing that we had access to those. So Alun, over to you.
Thanks, Mel. Not often I get to speak for the whole of the UK, so talking to on what I'm going to say on the Recovery and Resilience Fund is applicable across the whole of the UK. It's only the grant bit that differs depending on geography. Mel's already posted in the chat the link to SIB's website and the details. And you don't need me to read that to you here, so I'm not going to do that. The finer detail you can pick up from the website. I'm just going to share with you some of the experiences thus far, what we're seeing coming through. It's probably fair to say that it's a fund for everyone, but not for everyone at the same time. So I'll probably explain what I mean by that as we go through. Certainly for everyone, there's a wide range of different types of organisations that are coming forward looking for funding. They're all ones have been affected by COVID, and that's the qualifying criteria, where the income has taken a hit. But we're seeing leisure centres, mental health charities, those supporting people with learning needs or disabilities, eating disorder interventions, even dental practices, and theatre companies. So it's pretty well the full range of what the sector does. And what are they doing with it? Well, they've had this income loss and are looking to fill a gap, or just purely for cash flow at times. But equally, there are those that are in the jargon of today, looking to pivot, to invest in something new, to move the business forward in a different direction in reaction to what has happened. We're also seeing people who are taking on the cash simply to maintain their reserves. You know, if you've got a reserves policy that says you should be holding X amount, and a lot of that cash is being swallowed up in keeping the business going in the short term, then making sure that the organisation can continue to meet its sort of legal requirements in that regard is important. Now, we've had one or two just come forward for that. And there are those that are still capacity building. But whilst generally what we have seen are large established organisations, big charities coming forward for loans, we have seen some early stage organisations who were getting there, but this all happened exactly at the wrong time, and now need an additional period of support for that capacity building. Let's say it's not for everyone. Recognising here that the minimum turnover for an organisation is 400,000, although to be fair, most of what we've seen coming through is significantly more than that. And there's a minimum loan on it of 100,000. So with repayments over 3 to up to a maximum of 5 years, they're fairly chunky repayment requirements. So, it needs to be a certain sort of business that is able to handle that. Because the assessments that are being done is looking backwards, if you like. How was this a solvent, sound business prior to March? Gosh, it was only March, 6 months ago. Was this a solvent business as at that time, moving in the right direction? Checking to see what has happened as a result of COVID, and then looking forward to say, okay, is it reasonable to assume that there will be a return to that sort of previous operation, and how can this money then assist that? Because we've seen people looking for repayment. Repayment can just come simply from the return of trading. Although we're looking at others who are disposing of assets to repay it. We were talking earlier about what the property sector is looking at in certain parts of the UK. Maybe there are quite some hotspots in terms of housing at the moment, but if you're trying to sell an office building at the moment, it's probably not exactly the best time to be doing it. Or perhaps if you've got to liquidate some investments to support your cash flow, doing it at the bottom of the market isn't great timing. So having cash available to essentially buy you time to manage that in your own way could be important. So that's really what we're starting to see. That it's being realistic about being able to repay and what you can actually achieve with it. The advert or the encouragement for right now is, if you're going to apply, get your finger out and get on with it. There is a deadline looming towards the end of September, although it's becoming a bit of a movable feast. But I think if you want to make sure that you're in there with a chance of getting one of these loans, then I would encourage everybody to apply as soon as possible. That's either directly through SIB website, or if you have a relationship with one of the other delivery partners, Big Issue Invest, CAF Venturesome, Charity Bank, Resonance, Social and Sustainable Capital, or Social Investment Scotland, or ourselves in Wales, link with us and make sure that application goes in. So that's what's happening on that, and I think, you know, Seb coming over the hill on his white Charger to with a bag of cash to throw at it in terms of grant is actually making it far more user friendly now, I think, because those short repayment timescales were going to be really testing for some organisations. So that ability to blend the finance is important. And I think blended finance is the future, if not already the present. Certainly where we're looking through, yes, it's nice to see that grant coming through from Access for England. And I think one of the beauties of devolved government has been an ability to work more closely with government and move faster than has been possible across England. We've been running our own support fund, which has been 75% grant and 25% repayable since before Easter. So as a sort of survival fund for organisations in Wales, which we're already able to sort of dovetail alongside our RLF. And that's about to merge, so we're looking forward, and everything that Seb was saying about the need for patient capital and properly merge stuff. The second phase of our resilience fund now is set to launch next Monday. You heard it here first. It's not gone live as an announcement yet. It will still be 75% grant and 25% repayable, and will contain still a survival portion of it, because we're well aware that, you know, these problems haven't gone away, and actually what's happened over the last few months is how brilliantly the funding element of the sector has stepped up and put an awful lot of cash into the system. One of the effects of that actually has been to kick some of the problems down the road, and certainly with the end of the furlough scheme and various other things, we're expecting to see another spike in problems, regardless of whether we get another spike in virus. So having some survival money there remains important, but we're also looking now at an improved strand and a diversified strand. So encouraging people to step back from the businesses, look at them, what could they do better, and what else might they want to do, and can they use some blended patient capital to do that. It's 2 years interest-free and repayment-free, and then a 10-year period at quite a discounted interest rate to pay it back. So that's what we're looking to develop in Wales. And hopefully that will be a useful model for people to go forward. That's probably all I've got to say, Mel.
Lovely. Thank you, Alan. That's great. Actually, I think I was reflecting while you were talking, you know, the fact that what I think you can clearly see is that whether you are looking for smaller sums of money, which we know that often growth fund providers can give you, you know, we know that the first time lending outside of a pandemic would be around about £50,000, or actually you're an organisation perhaps slightly larger and needing more support through something like the Resilience and Recovery Loan Fund, then I think it's been really interesting to see just how much flexibility there has been in response. That doesn't mean to say that there is always going to be what you need. There's never probably going to be enough money to go around for everything that the sector needs. I think the other real challenge is trying to keep on top of who's offering what. So the dedicated coronavirus resources hub, which I'll post a link to shortly, has had over 75,000 unique visitors to it. So we know that getting the information to you is key. But I think this actually brings us really neatly, and I'm sure that Matt's going to explain more about what Unltd does, the wide range of things. But we were reflecting the fact that Good Finance has always stayed away from grant funding unless it was blended, so alongside repayable finance. But obviously we find ourselves in very difficult and challenging times, and it seems really important, and that's why we just wanted to talk about what's changed in social investment over the pandemic period, to have a look at the full range of things. And so I'm going to hand over to Mathu, who's going to tell you more about Unltd and what they do, both in terms of enterprise support and repayable finance, but also something about the Social Enterprise Support Fund. Over to you.
Thanks, Mel. So a bit of background on Unltd. We are the Foundation for Social Entrepreneurs. And I think before COVID hit, we support over 300 social entrepreneurs every year through grant financing or investment financing, but also through working with social entrepreneurs on a one-to-one basis. When COVID hit, one of the first things that we had to do was really to take stock of what was happening to all the social entrepreneurs that we've supported over the years. And we found that social entrepreneurs either fell into one of four categories or two of four categories. They had to pause their business altogether. They were continuing to work, so what we call proceed. They had to pivot their business model, or they had to run in and find a new way of operating, so piloting a new revenue stream. So one of the four P's, pivot, pause, proceed, or pilot, is what we saw all of our social enterprises doing. And the overwhelming response from all of them was that they needed grant financing to help them through this time period, to help them continue on with one of the 4P strategies. And so what Unltd did was, first we freed up a bunch of grant funding internally through the help of the Access Foundation and also the other partners we work with to provide grant funding to our internal, to the companies we've already supported. But the second thing we did was work with a cohort of partners and the National Lottery Community Foundation to launch the Social Enterprise Support Fund. So the Social Enterprise Support Fund is an £18.7 million fund that was launched earlier this summer with the National Lottery Community Fund and Big Issue Invest, Unltd, the School for Social Entrepreneurs, Key Fund, and Resonance. The support fund is emergency COVID-19 funding, and we provide this funding to social enterprises, charities, that fulfill a few eligibility criteria. One is that they need to be operating in England, so unfortunately, again, not available to the rest of the United Kingdom. They must have an asset lock or certain clauses that make them eligible to access this funding, and you can find more information on the Social Enterprise Support Fund page. And the revenue needs to be between 20,000 and 1.5 million in the last year. And so we made this funding available over the last couple of months. In the first round of the Social Enterprise Support Fund, we gave out £5.6 million of funding, and we're in the middle right now of assessing the second round grant application. When we're assessing, we look at 5 different things. We look at resilience, the financial need of the organization, the impact that they've had in the long term and what kind of impact they can have in the long term, what their impact is in response to COVID. And then the fifth and final one, the fund has a really big focus on inclusion. So Black, Asian, minority, ethnic, disabled entrepreneurs, and organizations targeting communities that we feel have been, and we know have been proportionately hit by the COVID-19 response. The next window of the Social Enterprise Support Fund opens on September 10th at 1 p.m. and it closes on September 17th at 1 p.m. It is the absolute last chance to put your social enterprise in for funding, so please do apply. Aside from the Social Enterprise Support Fund, the other thing that's changed for Unltd is the way that our investment work functions. Unltd has 2 investment funds. One is called the Unltd Impact Fund, and we are a growth fund partner. We provide loans between 50 and 150,000 to social enterprises working on issues related to access to employment. And then our second investment fund is called the Unltd Thrive Fund. It's at much smaller ticket size, so providing that equity and quasi-equity investments between 20 and 50K for enterprises tackling employment, but also any kind of solutions that will help the population.
There we are. Okay, yes, sorry, I think Mathu's having some problems here. So we need to get some more information about the 2 funds. I have actually posted the links into the chat. So the Social Enterprise Support Fund, the grant fund, is open for round 3 on Thursday the 10th of September and then closes at 1 p.m. on Thursday the 17th of September. I believe that's the actual final time to apply. Mathu, I don't know whether you can still hear us, but your connection, I think, yeah, is just not allowing you to connect with us at the moment. Also, we've posted some more some links into the chat below. I'm going to actually take, I have a question while we're just seeing whether we can get Arthur to rejoin us, which I'm hoping Ishk, I hope I've got your name right. I do apologise if I've said that incorrectly. So we've got a great question here about pivoting, which is something that we get asked quite a lot about. So the question is around marsh farm futures in Luton who need to invest in changing their existing income generator. So pivoting from indoor soft play into older use of a climbing wall, and asking about applying for a grant. Well, I was hoping that Matthew might be able to cover that from the Social Enterprise Support Fund. And they're a charity and the main income is from large building assets, provides workspace for small businesses and charities. So though I can't answer the question about the grant in terms of Mathu for the support fund, but if she isn't able to rejoin us, I'll get the answer and come back to you directly. Then what we are able to say is that in terms of pivoting your business, there certainly are ways that if you believe that the income that will come from change that will repay the loan, then certainly that it could support, and I'm sure some of the growth fund providers could do that. Let me just ask Alun and Seb, have either of you got any examples of, or that you can think of, where people have done that kind of sort of infrastructure investment in pivoting their business? I've heard of a lot of service investment.
There are examples going through the Recovery and Resilience Fund now where people are doing something different and have had to, really, as a result of what they can't do now as a result. So yeah, I mean, I would say have a word with any of the delivery partners and see whether you can get into that. Well, it's probably worth saying that none of the other schemes that plenty of people run already generally haven't gone away. So it's not, it's not just COVID money that's out there. Although that's getting a lot of headlines, but there are still plenty of people out there who are doing things. So I'll leave it to you about the grant side of it. But
yeah, I mean, certainly in terms of the investment funds, I echo Alan's view on that being, the sort of thing that is the repayable finance is being used for. I think some of the challenge of that kind of business model pivot from an investor's perspective is obviously how comfortable a lender is going to be able to be about the revenue that's going to be generated from a new activity, and so actually this is the kind of scenario that was exactly in our mind when we were thinking about the blended product being available. And so what a number of organizations in that instance are looking to do is using capital for a number of things, some related to existing enterprise activity and some related to a new enterprise activity as a result of a pivot. And to a greater or lesser extent, it may be the case that the new activity is much harder to lend to simply because there's no track record. So it's very difficult for a lender to get comfortable with that. And so that is the sort of thing that could be well suited to a blend where the grant is supporting some of the new untested activity and the repayable finance is supporting some of the more established activity. Now, that's not, I think, the exact scenario that we're being asked about with this particular question, I understand. So apologies if that's not a hugely helpful answer, but the kind of blended option could well suit a pivot where the future is relatively hard to ascertain, not because the organization doesn't have a good trading history, but just because future markets are so hard to foresee. And that may protect both the borrower and the lender in that context.
Lovely, thank you, Seb. Mathu, I think we've got you back now. I don't know what your connection is like now.
Can you hear me?
I can hear you now, yes. I don't know why it just suddenly dropped out for a while. I think it was fine before. We just had a question specifically, which Seb just answered around grant, but it was one that I was going to come to you with, which is whether the Social Enterprise Support Fund might be able to help in that particular scenario around pivoting business.
So we can finance pivoting, but the restriction on the Social Enterprise Support Fund is that we're not allowed to finance any large-scale asset refurbishment. So if you need any costs around staffing or thinking through how this might operate in the future or operationalizing it, we can look at something like that. But if you put into your grant budget, we need money for a new climbing wall that's over £1,000, it's not something that's going to be accepted.
So it's the asset investment rather than the service or product investment. Okay, that's really interesting. But I mean, often when you have got something that has an asset with it, then that often can make a good case for repayable finance as an option. And of course, there may well be other support funds, and I definitely recommend that you check out the Good Finance Coronavirus Resources Hub, which I've posted in there, because they're again are more extensive products that are there as well. So I just wanted to think about how we might, I suppose, share some of the top tips, if you like, for organisations who are finding themselves in a situation of having to rethink their business model. I mean, it is a very interesting scenario we find ourselves in. I've spoken to lots of social enterprises and charities, and we have a huge variation from organisations whose income was wiped out overnight to organisations where actually there's more demand for their services and perhaps are seeking repayable finance to help service some of that demand. So they've not seen a let up in their organisation. And then very tiny organisations that perhaps had very limited income anyway, and again have probably managed to do more, but are probably thinking about how they continue to provide that service level going forward. So in terms of if you had to sort of I suppose a top tip when you're thinking about all of the options in front of you, and you think back to perhaps all of the organisations that you've spoken to or I suppose responded to from sort of access perspective, Seb, what would you say? So Mathu, can I go to you first? What would you recommend that organisations that are listening to this do when they're thinking about how they go forward with regards to support, be that repayable or grant?
And just to clarify, Mel, it's what would make like a proposal get through committee from the investment side or the grant side?
I think it's how you decide. You know, I mean, I'm sure obviously people often want grant because you haven't got to repay it back with interest. We don't need to make any bones about that. But sometimes grant might not be the right way forward, or maybe actually won't get through committee. So if people are sitting here saying, well, I'm looking at say Unlimited's number of programs, or I'm looking at all the things on Good Finance, where would I start? So what would be, if you think about the ones that have got through successfully, or how would you give people advice as to where to go next?
Yeah, I think start with your impact, right? That's why we're all here. So start with telling us what your impact is and how you plan on either growing that or deepening your impact with the customers and the beneficiaries that you work with. And then once you're able to make a case for that, then really take a look at your cash flows and take a look at the revenue streams that you want to bring in and really try and break it down. Often we get people that have large scale visions but haven't gone into the operational detail. And I think if you do some thinking about that along with your impact, you stand a really good shot of getting money.
Fantastic, thank you. That's an interesting one. Again, people often say to me, is it worth it, Mel? And then I always say to them is, think about your impact, think about what you will create as a result, and then you will answer that question for you. Alan, can I ask you the same question? I have a couple of more questions coming in a minute. I'm going to come to those. So, but any tips for people listening in?
I'm going to repeat what Matthew's just said, really, but certainly clarity. At the end of the day, what lenders are looking for is confidence that the organisation in front of them, in particular the people within it, can deliver what they say they're going to. So, how do you demonstrate that? Well, in many ways, it's showing that you're on top of your business and that you understand it, and being able to say very quickly, when I put things to my my decision panel, it's sort of, can I very quickly and very easily tell them what these people do? Can they get it very quickly? And not everybody can tell their story, but what do they do? What are their sources of income, and how are they generated, and for how long are they locked in? Are they contractual? Are they trading? What's the history of that? And really just being able to feel that that you're ticking things off, really. Yeah, there's nothing to worry about here. I get what they do. Tick. I understand it. Right. I understand how they earn their income. Tick. Move on. Do I understand what the governance structure is? Yeah, that's fine. Tick. Move on. As Mathu says, the impact. Yeah, fine. You need to be in there. And then when you're looking at forecasts, it's that common sense test, because whoever is going to be on whatever panel it is that's making the decision, you can guarantee probably don't know that much about the business that you're in. So how do you make them suddenly experts in what you do? Well, you can't, but you can make them experts in the underlying business fundamentals of it, so that you can understand. They can get a feel and understand that the demand is there, and that there's a difference very much between demand and need, because we get an awful lot of people come forward and say this really needs to happen. Yep, but who's actually going to put their hands in their pockets and pay for it? That actually turns that into demand, and being able to demonstrate that, at its simplest level, it's like the number of cafe proposals that you get. Who's to say whether £1,000 in any given hour is or £5,000 or £10,000 in that particular month is a good figure? But I can actually understand when you tell me that you expect to see so many people walk through the door and spend so much per head on however many days of the week. So however complicated your business model is or otherwise, if you can turn it into something that somebody that doesn't understand the business necessarily can understand, then you've got a better chance. You've got people that are on your side and they understand your business, and that's the trick.
Lovely, thank you, Alan. Seb, I'm going to come to you in just a minute if I can. I have another question that's come in, and I would say that we're not got that long left now, so if anybody wants to ask any more questions of the panel, please do post them in the Q&A. But I've got a question from Andrea. I'm going to ask it, but feel like if nobody on the panel wants to go for this one, happy to add something in. So Andrew's actually asking whether we can signpost to any current funding opportunities that focus on housing need. So she's particularly talking about in Brighton and Hove, they have very inflated property market and very high intermediate housing needs. And are there any new funds focusing on helping intermediate housing need? Does anybody want to take that one?
To save you having to blow your own trumpet, Mel, I think a good finance website would be a good place to start. Go back to something we said earlier, that the existing funds haven't gone away. So whilst there may not be a new fund per se, there will be a lot out there. But there are two ways of providing funding. One is down a thematic route, and the other is a generalist. Now, we're very much generalists. So, just because we're generalists doesn't mean that we don't do intermediate housing. So I would say, consider those that just because they don't overtly put themselves out there to be intermediate housing funders, they may well be, because it's the sort of thing that will be of interest, given the property requirements in the background. Those that are security-based lenders will have a particular interest in it. So I would say don't narrow your search in that regard.
Thank you, Alan. Yes, I mean, Andrea was going to say something very similar in terms of the fact that anything that has property or asset in along, there will be a wide range of investors that potentially could help and support you. It is obviously worth me saying that Big Society Capital have a range of specialist thematic areas that they work in, and homes is one of them. There are some specialist homes-based funds. Whether they would meet exactly your requirement, I would suggest doing as Alan said and have a look at Good Finance. So there are some community-led housing funds. There are some like social property funds. There is also Social and Sustainable Capital have a particular fund based around homes, and there is definitely at least one new fund that I know of that's coming, although it has a particularly target market. So I'm going to just post the link for you to Big Society Capital's homes fund, but I would agree with Alan. There's probably a broad range of investors that you could talk to. And there are some great case studies, actually. Homes is probably one of the most tested areas, and so there will be great case studies. I would definitely advise you to check out the stories on Good Finance, and if you can find an organisation that's doing something similar somewhere else, then talking to them about how they did that can be a great way to start. So unless I have any more questions pop up, I'm going to just try and summarise. We've covered a lot of ground in terms of from both the emergency perspective to the recovery perspective. We've had some great insights. So the things that I think the panelists have said, I'm just watching to see if I have another, oh, we have another question, so I'll get to that one, is around impact first. So being able to articulate at any time the difference you're going to make with the money is going to be key. And always the thing that sits behind that is good systems. Because I know that in order to be able to have, whether it be for repair money or grant, you need to be able to explain what you're going to do. To read this question as well as trying to summarise, I'm just trying to have a look. But I have a look what Ellie said. Okay, so this is about tech-based solutions, I think, of funds and grants that are particular. I think what I'll do, Ellie, is I'll come back to you separately, if that's okay, because your question's quite specific around tech-based intervention and support. I definitely advise that you check out Good Finance, but I will come and answer your question directly. Just doing, again, I'm just trying to check if I get any more questions. Watching both? No. The other thing that we've got to say is around navigation. That's come up time and time again. So how do you actually pick your way around? Who's offering what level of support, whether that's blended finance, whether that's grant, whether it's different in a nation as it is to in a particular geography, because we do have some specific funds as well that are based on geography. One of the things that you can find out by interrogating the Advisor and Investor Directory on Good Finance is again who does what where, and we're looking next month to launch an interactive map that will help you do that in an even more visual way. In terms of pivoting your business, I would say that's probably the most common question that comes up at the moment. So how do you adapt to the landscape? And what I thought I would ask, just come back to Seb on, is this challenge that we've never been in a situation, I think, before where there's so much unknown and therefore it's so difficult to plan for the future. Alan's talked briefly about what happens at the end of some of the government support schemes. And I thought it just might be interesting just to come back to Seb on how Access will continue to respond as the sort of recovery path becomes, I'm not sure when it's going to become more certain, but how will Access continue to work to respond as we work our way through recovery?
Thanks, Mel. Yeah, and I mean to the sort of earlier question around what should organisations be thinking about, I suppose I'd kind of echo some of the points Alan made really around business model, and I think for charities and social enterprises and particularly perhaps more traditional charities thinking about understanding this space. People who work in social investment are obviously very interested in the impact you're creating, but they see a lot of charities and social enterprises and can probably get their heads around that relatively quickly. The questions they will want answers to are exactly the ones Alan was asking. So, where's your revenue coming from? How stable is it? How secure is it? Do you really understand how your income relates to your costs? And to a much greater extent than applying for a grant from a foundation or a local authority, those are the questions you need to get comfortable with, and you need to be able to understand. So the extent to which whatever financing needs you have now are met by social investment or met by grants, obviously everyone rightly would rather have a grant, and everyone should seek out those opportunities. But if that isn't forthcoming, then the extent to which repayable finance is suitable is really down to how you generate your revenue, how secure it is, and whether you can generate enough revenue to meet your costs as well as repay the loan. And that sounds kind of really obvious, but I think to a great extent, when you're thinking about social investment for the first time, the focus that social investors and potential lenders will put on where is your income coming from and how secure is it is possibly more than you will have been asked those questions before. And so I think that's something to really pay a lot of attention. And so to your question, Mel, about what Access is doing, I think it is, as much as we can, ensuring that our support programs are allowing organizations to go through that process of really understanding what needs there are at particular times, with regard to how business models evolve and where income comes from, but also the extent to which financing products, new kinds of more patient, more flexible products are able to kind of offer repayable finance on terms that meet what income is likely to be there, and how business models are likely to grow during the recovery. So, as I said before, none of us have a crystal ball. We think the recovery may be a long and bumpy road, but making sure that the right kind of repayable finance that enables organizations who aren't yet sure of exactly when they will be generating revenue, but know that that's the path they're on, that's really the gap we're trying to fill. So that's a big priority for us, Mel. But I'd say, in terms of folks listening today, I think the priority really is thinking about how secure can you be about where your income is going to come from in this incredibly uncertain environment, and think about repayable finance being suitable for the things that are at the more secure end of that spectrum.
Okay, that's great, lovely. Thanks, Seb. I was just looking at Ellie's question a little bit more, which is around tech, actually, because this does come up quite a lot. Certainly came up a lot during the sort of very emergency piece. And I know some of the work that I and some of my colleagues, and working with Access and a range of other organisations, we were doing some work around mapping the needs, trying to really understand what social enterprises and charities wanted. And investment in tech was definitely high up the list of things that people wanted to do. Interestingly, that it came from a couple of different directions, I suppose. One was just organisations needed to do things online, so they needed to change their operational systems to tech. But increasingly, there is also organisations who want to invest in tech development and have some more issue focused. And I think this actually comes to the root of Ellie's question. One of the challenges, I think, is that often this is a space that venture capital has worked most prevalently in. And although that there are social investors, I'm going to just post in a minute for you, Ellie, there is a really good case study of Special IAPS. So, there are organisations like that have had investment. And actually, you would see an organisation like, goodness, I can't remember can anyone remember what Big White Wall's name is since they've changed the name? They've changed the name. I'll think about it in a minute. So organisations like that who have had to respond, and there's been great demand for their services. But I think in terms of tech-based specialist grant, I would definitely recommend going and checking out the hub, and I'll also have a look for you, Ellie. There's nothing that's coming to the front of mind first of all, unless any of the other panel can help me out. So that would be tech-based grant investment, but tech for tech development. But that would be the place where I would point you to. Anybody got any other ideas for Ellie? No. Sorry, Ellie, I don't think we were able to come up with a definite, but I'll definitely share that case study for you. Okay. Sorry, can you repeat the hub? Yes, I'll actually post the link again for you. It's actually a coronavirus specialist hub that's on Good Finance for you. Here we go. It's just higher up in the chat, but I'll just copy and paste it for you so that you've got it. Okay. So, do we have any final questions for the panel? Oh yes, oh, goodness, you're all going mad now. You see, we've got a few more time at the bottom. Let me see. Let me have a look. What else have I got? Oh, they're all from Andrew, yes, I think in the answer to your question then is yes, I do think that there are a number of different examples. What I would suggest, Andrea, is after the webinar, perhaps we can be connected directly and I can support you with a little bit more detail on some of the questions that you're answering, because I think actually there's some really good case studies that we can point you to. I'm trying hard to multitask. So I can just respond to Ellie. There we go. Okay. Right. So any more questions from anybody else? I've got a few follow-ups with Andrea. I don't think so. So no any more for any more. So we are going to finishing a little bit early, I think. So in terms of time. So is there anything that the panel want to add before we round up today? Otherwise, I will try and summarise. Right. Anything else you want to come in with? Right. Okay. So. Thank you for joining us. There's been a whole range of different resources that we've posted into the chat. What we will do is follow up with everybody that is registered so that you get the opportunity to see all of those resources. I think the overarching advice that has come from the panelists today is to say that trying to understand your business and what your business and trading might look like as you go forward will be the basis of any request that you can actually make, be that for repayable finance or for grant. We know that there is going to potentially be another hurdle for us to get over when the government support schemes come to an end in or around about October. So probably trying to look at different scenarios for how your business might look, whether that is around pivoting and investing in new services and product offering, or whether it is about reimagining your business as it was previously. There is a huge range of support, and if there is one thing that I can say that I'm very proud of being in the social investment sector is that I think it has been able to demonstrate just how social investment can be, and we've really been able to look at what's needed and see to what extent we can flex the money that's available to best suit the needs of the organisations. So I think there's a lot of learning to be done. We get some great stories, we get some difficult, and there'll be challenging stories. I think, you know, it's not going to be without organisations who won't get through this and survive, but we hope that the resources that are available can help the organisations that are there. Oh, we've got Hatch as well that's being recommended, so I always love it when people can help each other out, which is great. I've got that Hatch, don't be upset with me for getting in. That's great. Please do feel free to get in touch with either myself or the Good Finance team if there are any questions that we had today that we weren't able to answer for you. I think we managed to do the lion's share of them, and keep checking out both the individual websites, posted all the links for you, and also to Good Finance, because you know things do change pretty much on a daily basis, and that's probably the best way to keep up to date. Thank you very much to Alun, to Seb and to Mathu for joining us, and I hope you found it useful. We have recorded the session, and so we will also be able to share in case you want to listen again. Lovely. Thank you all for your time.